Welcome back, ladies and germs. Appreciate your time. Thanks for coming and dropping in. Today's topic for the crude news, I'm going to say, is going to be kind of updating and covering WTI and current price action, what's been going on the last few days. If you've been following along, today is, well, when I pull my information, it's January 24th. Today is actually Friday the 25th, but I'm going to kind of cover, not much has happened overnight. Price is still fluctuating around $53.5 a barrel on the WTI market. If you noticed, and if you pulled up a chart of WTI crude oil, you saw we were up in the 70s going into basically October-ish. Then basically just fell in Q4, bounced like a ball. We're back up to kind of where we are now. We were in the 70s, dropped all the way down to the 40s. Now we're in the 50 range. 50s are good for shale standpoint, kind of where I'm at and what I do. 50s is kind of a happy medium, cheaper at the pumps. We're still making decent profits. With that being said, something I'd like to talk and cover on is why that price actually fell kind of dramatically. Now, this isn't 100% why, but this has stuff to do with it. But generally speaking, since I've been involved with the oil market, Q4 every year is basically companies are wrapping up their books for the end of the year. Not a whole lot takes place. Unless it's boomtown, then all bets are off. But these past few years, Q4 has been pretty slow. Another thing, too, is we're seeing issues, and I'm not speaking for the entire country, crude in general, but we're seeing issues with supply builds. Now, when you have supply build, the way it works, it's basic economics, supply versus demand. So if you're turning out too much supply and you can't turn that supply into demand, then you're going to have what you call builds. We've got excess sitting around. So those excess have to sit before the product can go, same as your grocery store. You make 30,000 caps, you sell 10,000, you got 20,000 left just sitting there. Either you need to move it or whatever. So instead of getting $30 a cap, you're going to put them down on sale for $25 so you can move product. Crude oil works in the same, just a bigger scale. But also, to take into account, usually in Q4 is when you start having refinery maintenance season, they coin it. A lot of your refineries are going to start shutting down, not shutting down, but slowing production down in order to service and maintain parts and get ready for usually the ramp that comes into Q2 on the following year. So a lot of times you'll start seeing that. That's another reason why supply is outreaching demand and product or pricing is falling to basically offset that. Also, another thing that's been going on recently, and I see another challenge, I've retweeted several articles regarding crude, West Texas crude, being the Delaware Basin, the amount of crude that's being produced. Well, I saw an article, and I'll try to get a link put in the description box, of apparently West Texas oil production is 20 years ahead of schedule, is what they're saying. So our technology with horizontal drilling, fracturing, yada, 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 is actually yielding better returns than we actually thought it. And it's actually coming along faster. What does that mean? More product. But with that being said, now we're seeing bottlenecks in the pipeline as far as moving that much liquid in order to get it to where we can start exporting it. Which oil is being exported, but the problem is, how do you move so much oil from West Texas to basically the ship channels around Houston? Well, it's got to be in pipelines. Well, those pipelines are laid, however, they're too small. We can't fit that much product through. So I've read several articles, and they're working on converting some NGL lines in order to run crude oil through those pipes down closer to the refineries. That's all in the works. I know 2019, 2020 is a pro's time to get more line put in to move more product. Interesting times. It's a pretty impressive thing. So with that being said, here's kind of my 2019-2020 thoughts and outlooks for crude oil market and what's going on with WTI. These are my thoughts, my opinions. Take them with a grain of salt, because ultimately that's what it is. It's just how I feel. But I feel like 2019, 2020, I think we start seeing we're not going to see a ramp. I really don't feel like there's going to be a ramp. Ultimately, we're turning the product to where ultimately infrastructure's got to catch up in order to get it to where we could start exporting this stuff and getting more dependent on just U.S. oil. And while I'm here, disclaimer, my opinions and thoughts come from a U.S. producer standpoint, or a U.S. oil worker standpoint. I try to be open, realistic, and optimistic about everything, but my thoughts are only from what I can take in as a U.S. oil worker. Anyway, so 2019, 2020, we're going to see a lot more infrastructure ramp up to move more product throughout the U.S., and I definitely see us exporting a lot more. I think I looked at the last numbers. We're producing around 10, 11, 12 million barrels a day, I think. I fully expect us to be around 14, 15 million. Just shooting from the hip here. We should be around there as long as price stays, I'd say, in the 40s. You start getting in the 30s. I know West Texas, when it crapped out in 2015, 2016, they were still, business still kept going, and we were in the 30s. And that was good to see for worker standpoint, but I don't know how long that's sustainable. You're going to see a lot of big companies. What I feel like we're going to kind of see is a lot of big companies acquiring smaller companies. And what I mean by that is, for example, like, how in like 2007, 2008, how a lot of big banks started swallowing up these small banks because of interest rates and all this other BS. I really think you're going to start seeing that in the oil market. Even now you see like companies, little small mom and pop, and I say mom and pops, they're smaller companies, but smaller companies are getting acquired out in West Texas, New Mexico area for the acreage and the land that they have. So they're going to have to take those profits and either reinvest them into the company, or as far as that is in moving to other areas, or you're going to see them completely get engulfed and swallowed by the big fish. So you're going to start seeing, and you're kind of, to me, you're seeing it now. You see a lot of the big names and big players, they're out in the Permian Basin, a.k.a. the Delaware Basin, for the new play. Kind of how you saw a lot of the big players leave the Eagle Ford, and they divested from that area. They started moving out west for better profits, better oil returns, yada, yada, yada. I think now you're going to start seeing that in the Permian within the next 2 to 5 years. I know we're still making a lot of oil, but all the big fish come in, they establish, they make good profits, and then you're going to see guys trail in with these smaller companies trying to buy those assets off of them, and then they're going to move to the next big play, which from just what I hear is going to be like the Colorado, Wyoming area. I don't know how true that is. Maybe it is, maybe it ain't. Who knows? Who cares? You can't really do anything about it. But you're going to see kind of like the Eagle Ford, where these big players, they left the field, they sold to smaller guys, and then when the ball drops, these companies go in trouble. I mean, it's the same song and dance that you see. You see them before. If you paid attention to history, you'll see this happen. So to me, that's my outlook for 2019, 2020. I think oil's going to stay around the 50 area. I don't see a bust. I don't see a boom. I just see operations gearing as well as they are. Infrastructure is going to start coming in. We're going to get more infrastructure in order to move more product. I foresee that, and I also see bigger companies acquiring smaller companies. and I see a lot more small companies go bust for various reasons, mostly financial reasons. Acquiring funding, securing notes, securing debt, yada, 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 all that stuff that goes into play with E&Ps. So, yeah, like I say, guys, $53 a barrel is where we're sitting at. Natural gas around $3.10 the last I looked at it. Natural gas. Need I say more? But from an oil standpoint, yes, yeah. And just to reiterate, Q4 is generally slow because of refinery issues and maintenance. And be interested to see what they do with this bottleneck of moving crude from the new Delaware Basin into ship channels where it can be exported. So with that, guys, thank you for your time. I appreciate it. And stay tuned. We'll have some more articles. Thanks.